Good morning, wherever you're watching from. It's Business Morning live on Channels Television. Great to have you join us. Well, thank God it's Friday. Let's take a look at what's in the news of business right now. We see oil prices dipped today, putting the market on track to end the week roughly unchanged. As surging cases of Omicron coronavirus variant raise fears new curves may hit fuel demand, while a weaker dollar supported commodity markets broadly. U.S. West Texas Intermediate crude futures fell 17 cents to $72.21 a barrel, while Brent crude futures 11 cents fell by 11 cents to $74.91 a barrel. The Organization of the Petroleum Exporting Countries, Russian allies, together known as OPEC Plus, have said they would meet ahead of their scheduled January 4th meeting if changes in the demand outlook warrant a review of their plan to add about 400,000 barrels per day in January. And as Nigeria prepares to usher in a new year, First Bank says it is mindful of the economic uncertainties that comes with it. More so with 2022 being a pre-election year. This formed the basis for the bank's SME Connect webinar, where experts shared economic insights that will help small and medium enterprises develop strategies for business growth and help them build resilience in the coming year. Do take a listen.
In a few weeks, Nigeria will join the rest of the world to usher in a new year. Just as individuals make new resolutions, businesses desire to perform better in a new year. But how well are they prepared to realize that aspiration in 2022? That question forms the thrust of the latest First Bank SME webinar series.
Now, at First Bank, our promise to SMEs is based on 7 pillars. We have promised to connect SMEs to market, finance, capacity building, infrastructure, resources, talent for business development, and inform them about policies and regulations that impact their business.
Research and development economist Gospel Obele takes the virtual audience on economic trends, market outlook, and business opportunities in 2022 and proffers ideas on how SMEs can scale for growth.
When you think of business growth in the coming year, especially in the pre-election year faced with increased cost centers, you want to think of how can I get my products and services to more scalable clusters where they have much more money to spend, all right, on a month-on-month basis.
Jovita Madu Jamu talks on how entrepreneurs can remain profitable through proper bookkeeping.
There's somebody who once said, business is not about what you make, it's about what you keep. And so the expansion you're looking for really is in the planning, in working with a budget and ensuring that only planned expenses are catered for. Of course, sometimes there could be emergencies, but if every week you're having emergencies, then it means your planning is faulty.
For business owners to map their way to business growth and resilience in 2022, Chike Uzoma identifies elements of culture, leadership, change, and discipline.
Discipline is saying what we say as a business we will do. We will follow our vision and we will always react and be flexible to ensure that the business remains relevant in everything we do, in everything we get into. We are disciplined in driving to success.
The organizer expects that participants will apply the thoughts shared by these experts in their businesses. First Bank is a leading financial inclusion services provider in Nigeria and West Africa. The bank has been at the forefront of impacting businesses over the years and has consistently won awards for providing innovative solutions for customers and other stakeholders, including small and medium enterprises.
Well, it's all about supporting MSMEs right now. Well, after the break, the Securities and Exchange Commission is to commence a regulatory fee on fixed income bonds and secondary market transactions. We'll be looking at how this will impact the market. After the break, do stay with us. This is Business Morning. All right, now let's bring in Michael Ogurumi, macroeconomist and fixed income analyst with Chapel Hill Denham to weigh on the matter now. Great to have you, Michael. Good morning.
Yeah, good morning, Ladi. Thanks for having me.
Good morning. Yeah, so you got the information this morning, the SEC, announcing a fee on fixed income transactions. Tell us more about this fee.
Okay, so this is a new regulation was first listed on the SEC website, I think about 3 days ago. And so the SEC is saying that about 0.025% of fixed income transactions, fixed income transactions will now count, as levies. So it means that for every fixed income, transactions that will take place, on a, security exchange, 0.025% of the value of that transaction will will count as fees for the SEC, and then another 0.025% of the value of the transaction will count as fees for the Security Exchange Commission. In terms of the impact, I think that more money for the SEC, more money for the government. If you do a little bit of maths, total turnover in the market in 2021, was over 40 trillion. If you do 0.025% of that, you're looking at a revenue in the tune of 10 billion naira to the SEC on an annual basis, right? So more revenue to the SEC, more revenue to the government. But as far as investors are concerned, I think the impacts, will most likely be insignificant because of the size of the charges, and so, I mean, if I'm to speak, in clear terms, I'll say that yeah, quite right. The charges might have some sort of impact on pricing and liquidity. But then again, like I said, I don't expect it to be extremely significant because, for one, once charges are imposed on fixed income transaction, what it means is that, a couple of transactions will now be priced, to reflect the new charges. That's number one. And then in terms of liquidity, you might have some sort of aversion in terms of, facilitating fixed income transactions at the early stages of this implementation. I'll say, let's say over the next, 3, 4, 5 months of implementing this. But overall, I don't think that the impact will be, extremely significant, to push the market in any particular direction.
All right, we'll be watching out for investor reaction with that. But the year is almost coming to an end, and the activities in the fixed income market is rounding up for the year. How would you describe the broad performance of the fixed income market in 2021? Would you say it was bullish or bearish?
It's been an interesting year for the fixed income market, right? But I think that overall the market has been bearish. So I'll justify my position, by looking at how the yield curve has performed and what has been, the outturn of turnover in the fixed income market. So if you look at the yield curve year to date, it has risen by about 486 basis points, and that's at 4.86%, right? And I mean, it's quite a sizable number. The fact that the yield curve is higher simply speaks to the fact that prices are depressed, and that could have been an outcome of either weak demand or high supply. So simply telling you that on the basis of the yield, the evolution of the yield curve, the markets, fixed income market has been broadly bearish. And then if you look at turnover in the fixed income secondary markets, data from FMDQ shows that as far as activities in the secondary fixed income market is concerned, by volume has declined, by 55%. And then you look at, the value of transactions this year, it has declined by about 66%, to about 42.4 trillion, like I said before. And so what that simply means is we've had a decline in the level of activities, both in terms of volume and both in terms of value. It simply tells you that we're not seeing as much level of demand like we had in 2020, compared to what we currently have, right now in the secondary fixed income markets, and that would have most likely been, a signal to the fact that the market has been bearish. So in terms of the evolution of the yield curve and how, and the fact that turnover in the fixed income market, the secondary fixed income market has been lower, simply tells you the story that the market has been broadly bearish.
Broadly bearish. Okay, let's take a look at issuances in the market. How did the fixed income issuances evolve in the market in 2021, with reference to corporate and sovereign issuances?
Okay, so in the sovereign space, I think that issuances in terms of treasury bills and bonds, was sort of printed stronger, this year, and that is because of the fact that the government had a supplementary budget, which was about naira 82 billion, this year, and so that pushed the budgeted domestic borrowings to about 2.74 trillion for 2021. And that's, that sort of scored, the level of issuances we saw in terms of treasury bills and FGN bonds. But I think one of the factors that pulled the overall level of issuances down in the market is the aggression of the CBN in the OMO space. So what we've noticed, or what we've seen this year, is that the CBN was not that aggressive in terms of OMO issuances. In fact, if you look at, on a net basis, the CBN has allowed, some liquidity to filter into the market. And so what that simply means is not all of the maturities that hit the system, this year was refinanced by the CBN. So on a net basis, the almost space, issuances was much more weaker. And then if you put a number to it, you notice that, the issuances, in the almost space, was down by about 69%, which is quite, significant, And so because of that, that sizable deep in almo issuances, when you sum up issuances, in the NTB, the bonds, and the treasury bill space, it was down, it's been down 28% year to date, so about 8.84, trillion. But if you look at the corporate space, issuances, are also down, and that is because of the fact that pricing of new issuances is a bit elevated. So it's rather a bit more expensive for corporates to issue fixed income instruments, especially commercial papers, right? But I think the bright spots in terms of issuances will be for Eurobonds, right? So we've seen this year the government issued about 4 billion naira worth of Eurobonds, and then you look at corporates, like United Bank of Africa, Fidelity, Access Bank, all coming to the markets to take advantage of the low yield environment to issue. So overall, I would say that review of issuances, yes, in terms of local currency issuances, I think it's broadly down. But in terms of Eurobonds, USD denominated issuances, I think it's been quite impressive.
All right, let's look at participation. Now, how would you describe, domestic and foreign participation in the fixed income market for 2021? Would you say it was stronger or weaker compared to 2020?
So again, I mean, it's basically mirrors the performance of issuances. So if you look at the Eurobond space, what we've seen this year is quite, a strong outturn of participation in that space. And it tells you a very, peculiar story that a lot of, investors who are interested in the Nigerian economy, are more biased towards, dollar issuances than local currency issuances, And of course, I mean, it's quite clear why they're doing that. I mean, we've had quite a stronger dollar relative to the naira this year. So it makes a lot of sense for anyone to want to take a long position in USD denominated fixed income instruments, right? But to speak to the number, if you look at local currency issuances this year, that's at the auction, the FGN auction, the FGN bond auction, the treasury bill auction, you notice that participation has dropped by about 49%, to 11.65 trillion when you sum up, the level of subscriptions we've seen in those auctions. So in terms of local currency issuances, participation or interest of investors in that space is lower. But in terms of Eurobond, again, we've seen quite a sizable level of interest in that space. And I mean, it's even interesting to note that even some of this, corporate issuances saw, quite, an elevated level of domestic, interest. So what I'm trying to say is we even have quite, a number of domestic investors, latching on to, USD denominated issuances that are coming out of the Nigerian fixed income space. So that's basically the divergence we're seeing in terms of participation. A good one on the Eurobond space, quite a bit of weak, participation in terms of local currency issuances.
All right, but well, would you say investors have been better off or worse off participating in the fixed income market in 2021?
To be honest, Ladi, on a year-to-date basis, I will say that investors have been better off. If you look at the corporate, yield curve and the sovereign yield curve, both curves, have gained about 5% on average this year. And so what it simply means is that if you have someone investing at the beginning of the year, and they've held the maturities that they invested in up to now, in terms of the yield they would have gotten, they probably would have gained about approximately 5% thereabouts. And I think it's a fair one for investors as far as the market is concerned. From a relative point of view. So I would say that I think investors have been better off. And again, another point would be to say that the fact that we've had some Eurobonds coming from both from the sovereign side and from the corporate side has sort of provided some instruments for investors to diversify their portfolio, which again is a very good way to beat down the level of their risk. So I would say that I think that investors have fairly been better off this year.
All right, it's been an interesting year. We've had inflation, and they've said inflation is transitory. We've seen global markets, suffer from inflation, having new highs, when it comes to inflation. And next year, we see the Fed is looking at a hawkish stance. We've seen the BOE also raise rates. But, looking into next year now, how do you see all of this impacting, fixed income markets in emerging markets?
Well, to be honest with you, Daddy, just like you said, the undertone we have in the market currently is that interest rate is still high. In fact, as of yesterday, the Bank of England, hiked their monetary policy rate by 25 basis points. That was everyone said that coming, considering the evolution of inflation in that space. I think that next year the payout of all of this would be to say that yields might likely go up, in the fixed income space, because it basically mirrors how the MPR performs. If you consider the outcome of the CBN meeting, that was held last year, the CBN stated categorically that they are now looking to pay attention to developments in the global monetary policy space as far as monetary normalization is concerned.
Okay.
So I think that next year we might see a bit of yield going up, but then there are also downside risks to that, and that is basically the evolution of the coronavirus and variants.
Exactly. Let's hope
but overall,
there's no other variant. All right, Michael Oguremi, macroeconomist and fixed income analyst at Chapel Hill Denham. Always great to talk to you. Thank you so much for coming on the program.
Thank you very much, Mike.
All right, so we'll take a break now. When we come back, we'll look at social welfare in Nigeria. That's in a moment. Do stay with us. Welcome back. Still watching Business Morning. Now to our next conversation. The COVID-19 pandemic has impacted global economies in unprecedented ways, from health to harsh economic impacts. But many of the primary effects of the COVID-19 crisis in Nigeria have been economic, and lack of social protection exposes any population to large welfare losses. Well, the federal government launched the National Social Register in 2016 and now holds over 44 million individuals. Well, how has it fared in capturing a vulnerable in society? To talk about this, we have Yewa Apara, National Coordinator, National Society Safety Nets Coordinating Office. Join us on Business Morning. Great to have you on the program, sir. Good morning.
Thank you very much for having me. Good morning.
Yeah, so, when we talk about social safety and social protection, like that obtained in developed countries, some would argue that the vulnerable in Nigeria are not adequately protected. Can you paint a picture of where we are now when it comes to social safety?
Thank you very much. The social safety nets flaws or space in Nigeria. It's recent, it's new. It's been perhaps you would say a sector that is only growing. But not that we are inexperienced or we don't have experiences in this. We have had that long ago. Our various attempts at poverty alleviation programs such as NAPEP, such as Program for Roma Women, Shopee, are all programs that speaks to the social protection flaws. However, in 2015, when the current administration came into being, they prioritized social protection as the major strategy for poverty alleviation in the country. And because we didn't really have a strong system before then, and they started from the scratch. So they started by establishing some of the building blocks of social protection implementation, one of which was the establishment of the social register. Now, the social register is an information gateway to potential eligible beneficiaries to any social intervention program. And so the country decided to build from the bottom up. You will see from past experiences of Shopee, NAPEP, and other programs, it was more top-bottom, where the federal government decides on the program either to give Keke NAPEP or to give cash for pregnant women and the likes from the federal level, pass on to the state, and the state government will then decide who gets what at that state level. However, with this current thinking, in line with global best practice, the bottom-up approach was adopted by the federal government, wherein the community members, who are the people themselves, will sit in plenary and determine who amongst them is poor, based on the context of that community and what they define to be poverty. And so the community will come together and will divide the community in three homogeneous groups of male adult, female adult, and then the youth. And they will be asked to define poverty within the context of the community. And you know the complexities of Nigeria. One community is different from the other. Like Edna Ogoli said, 1 kilometer makes another language in Nigeria. And so with those kind of cultural diversities, the context for which we define certain concepts is completely different from the other. So when the community members, the male, the female, the youth define what poverty means to them, we then ask them to identify those who are poor and vulnerable amongst them. And once they do that, we come back to the plenary with the entire community and form the harmonized poverty list for that community. And so the three groups will have to agree on a family are judged to be poor based on their definitions. Some definitions come around families who cannot afford any piece of land to farm on. That means they don't have any title land to their names or their family, and therefore they are poor. Others who attest to that if even though you have land, you cannot afford to farm because you can't afford farming inputs or labor, then you're poor. Others will define it as a household with just 2 round huts, but 10 members of the family cohabiting in 2 round huts. That means they cannot afford basic housing. And as we know, poverty is multidimensional. Poverty is not only income, but poverty in your health, poverty for infrastructures or access to schools or sending children to school, etc. And so once this is done, the community would then sign off on this harmonized list. They would select 1 male and 1 female who will sign off on this list that becomes the community poverty list, or what you could call a community social register. We pick this list and we'll go back to then register this community using electronic devices through a software called Kobo Collect.
Okay.
Now, what we also do in addition is to take the community profile. So for every poor and vulnerable household that is picked in the family and we register them, we could easily identify the proximity of that household to the nearest hospital, to the nearest market, to banking facility, the strength of GSM network in that community, access to that community, whether by tar road, bush path, etc., the presence of a police station, supermarket, etc. Now, this infrastructure and the profile of the community is so identified within the social register to also help intervention. Now, fast forward to your question around how have we fared. So far, from the beginning, and by 2018, when we came on board, when I came in as a national coordinator, we had the social register in about 8 to 19 states, and the total number put together was about 350,000. What we then did was to pull it together. First, look at the checklist that will collect the information and harmonize it with the national databases. You will recall in 2015, Mr. President signed a white paper mandating all national databases to harmonize their records with the NIMSI. And so with the social register harmonized with NIMSI database, it then means if you take information from the national social register for any individual, all you need to do is the biometrics to give a bank account number, international passport, or access to tax identification number, and all the rest.
All right, Mr.
Now,
Pera.
from 2018, April 1st,
Okay.
yeah,
Yeah,
to
so,
date, we have registered 44 million poor and vulnerable individuals. Now, is that enough? No. The absolute poverty headcount of Nigeria as at March 2020, when NBS released the figure, puts the absolute headcount of Nigeria about 40.2%, translating to about 82 million individuals below the poverty line. With COVID-19, a further estimate of between 7 to 10 million have fallen further down the poverty line, making it around 92 million. We are at 44 million. That's almost about 49 or 47% of the total poor in the country. Now, this provides a huge database for interventions. At the moment, the federal government, through the National Cash Transfer Office, is paying 2 million out of that number, 5,000 every month. Every two months, they pay 10,000 naira. But also, utilizing the social register is UNDP, who has also mined for small businesses, and they are paying about 38,000 naira to small business holders across 10 states, about 150,000 of them. The UN Women mined close to 20,000 single mothers, that's widows or single mothers, in the register, and they are paying them 10,000 naira.
All right, Mr. Pera. Mr. Pera, but, you know, with all these monies, you know, being disbursed, how do you make sure that the people that actually need this money actually get it?
It's from the social register. Like I said, the social register is the bottom up. So it is those who actually are just poor and vulnerable in their communities and society that gets to benefit. It is about the most transparent process of identifying the poor and vulnerable. Now, when the COVID hit, the federal government also came up through the Economic Sustainability Plan, the 1 million cash transfer, through what the process we call the Rapid Response Register. This Rapid Response Register targets the urban poor. Now, when we started building the register, we started with the poorest communities. But you agree with the COVID-19 and the impact, it is on the urban poor. And the targeted urban poor herein are those who depend on daily income in our community, in our society, in our cities for survival. The taxi drivers, the bus drivers, the akara woman seller on the side of the street, the salonist, the barber, the bricklayer. Those people who they must come out every day to earn a living. Of course, all of us that work in offices also come out every day to earn a living, but our salaries are fixed monthly. But these people, if they don't come out and earn that, sell that akara, sell that granite, or carry the passenger on Okada, they will not earn. So these are the urban poor that we target through a scientific methodology of identifying them using
what about
SMS and USSD code for them to register.
But what about those that are, you know, employed and lose their jobs? Is there any accommodation for them?
Yes, they are accommodated in the Rapid Response Register. So those who have lost their jobs, you see, when the economic crisis of COVID-19 hit, a lot of people lost their jobs. If you go even, the last time I used the example of channels, I mean, you used to have like maybe 3 gardeners or 4 gardeners, you used to have drivers, security, and all of that. And it's across all businesses. And because the businesses were hit, Income for businesses was dropped, and so all businesses were in crisis, and so they laid off staff. Those people are the people who are targeting in the rapid response register. So once they apply through dialing 969 or star 969 hash with the community code through a USSD entrance, they are able to register onto the rapid response register. And at the moment, the federal government is paying those from that rapid response register, 1 million of them, 5,000 for 6 months. Now, this 5,000 for 6 months will help people come back on their feet. But more, we are now on a business time program. Let's speak more to the advantages this holds for businesses and why perhaps we advocate that businesses should be taking interest in social safety net programs such as ours to invest in. When you inject cash into the economy through a cash transfer, there is evidence, global evidence, that you have a return of 1 naira, 3 kobo for every 1 naira that you push in. Now, let's take an example where you give 5,000 naira to someone who's lost his job, who's been back at home. Immediately, the global evidence shows that 70% of that amount of money will be used on basic consumption, which is food, medicine, or call credit. Let's even take call credit. You've empowered the person to buy a credit of 500 naira into his phone. Now, what then happens is that there's increase in demand for call cards. And when demand increases, you are the economics, you tell me better, supply will need to come.
Right.
And when supply comes, there's pressure on production. You need to make the products available to meet the demand. And when you increase production, all the economics of scale then set in. You will need to employ more people to be able to meet your production quota. And so these people that have been laid off suddenly have opportunities to come back to the job by just injecting that amount of money. That's why countries like US, immediately after post-COVID, injected cash into their economy by paying, I think, about $1,000 to those who have been impacted or affected by the COVID.
Right,
and so it's a short gap measure of between 6 months, not more than 1 year. And when you inject that kind of money, then you trigger demand. When you trigger demand, supply will have to come. And when supply comes, production will have to come. And when production steps up, there are gaps created. One, in terms of employment and employing more people.
All right, Mr. Pera.
Demand on pressure on raw materials, which then put pressure on our local producers, farmers, and all of that, increase their income. But hey, the good news again is government also smashed to the bank because taxes are going to increase. Income taxes are going to come from the company.
Yes. Let's
and consumer tax and VAT.
Let's look at another angle of this. Now, you know, all of this costs money. How is funding, funding most of these interventions? Where are these monies coming from?
So for the federal government, from our point of view, the program, our program is run by a facility taken by the federal government from the World Bank of $500,000 over 5 years. The first phase of this program will terminate June 2022. With this, how have we used this money? We've used this money to raise the Nigeria's first social register of poor and vulnerable. It is by far the most comprehensive database in the country at the moment, housing information of 44 million Nigerians. That particular data set has 138 data indicators for every individual across the biodata, the educational qualification of that person, the vocation, the location of the person, whether the disability status, the health status, clinically ill or what it is. It also houses information on school enrollment, etc. So it's a huge database. Now, this is all available, and you know data is gold. Using data, every state is able to plan for their poor and vulnerable. developmental projects. So the value is huge in that sense. Now, also, we've been able to use that money to pay 2 million people 5,000 naira every month, injecting on average. That's 5,000 times 2 million gives you around 100 billion. Forgive my maths, I'm not very good at figures, but about that in the economy, as an economist, you know, feeding that amount of cash and the multiplier effect of it and the impact of it. The federal government is also now discussing with the bank, with the high rising cost of inflation occasioned by COVID-19, but other economic crises, an intervention with the World Bank to continue, but targeting now on the urban poor who are most impacted. The federal government has also announced the removal of oil subsidy. This will bring immediate hardship to the urban poor.
Yes, that's
the taxi drivers, the transporters, etc. So federal government is saying, I want to pay 40 million people for the first 6 months to cushion the effect. Now, what the federal government is using this to do, it's not to throw money away, but it's using that 5,000 naira to cover the gap of increase in transport. And perhaps a little explanation. So when you commute from, say, Nyanya to central area here for 100 naira, as an urban poor, when the oil subsidy is removed, that transport cost is going to increase to 200 naira. But you still have your 100 naira. Now, the federal government will give this 5,000 naira that will cover that gap of that extra 100 naira for you for the first 6 months. This helps you stabilize. The shock is not as much as it would be felt ordinarily, and you're able to then channel your energies to improving your status and back into line. But that stopgap does help. But then the injection of that cash into the economy helps stimulate economic growth, like I explained earlier. So it's a balancing act. And cash transfer is not a giveaway. It's a strategic investment in unlocking the economic potentials of this country.
Okay, Mr.
Because
Appiah.
everyone, and we have success stories everywhere of using these monies to invest, to improve their economic life and their communities.
Mr. Appiah, what about those in the rural areas? How do you reach, those in those parts, and also those that are on banks that don't have, bank accounts? How do you get these monies to them?
So we work with the state team. So for every state of the Federation, 36 states and the FCT, there's a state operations and coordinating unit in the ministries of planning. It is deliberate, and we insist that it has to be in the Ministry of Planning, because the planning ministry is where government development efforts are domiciled in terms of plans, in terms of budget, but in terms of tracking impact and also looking at the performance. And then, in turn, the State Operations Coordinating Unit recruits staff of the local government. In every local government of the Federation, 774 local governments, we have what we call the community-based targeting team, ranging from 18 to 30 members of the team. They are responsible for reaching out to the communities and developing the registry. Now, as far and as much as possible, payments is digitized. And you will agree with me that in every of our communities now, we have an offshoot or growth of POS, payment service providers in each of the communities. Communities where you don't have some domicile, in every market day, you will have POS and access to POS. So we do digital. To places where those infrastructures are completely absent, and we know this because we do the community profile that I explained to you earlier, that we know the proximity of every poor and vulnerable household peak to markets, to good roads, to banking facility, etc. So those communities that we've mapped that have a complete absence of such infrastructure, we use what you call the money agent. And you know also that we have mobile money agents all over the country. So these mobile money agents take the cash to the beneficiaries who have access, don't have access to facilities. But then your question on the unbanked, what we are doing with the social register. Remember I said that we have harmonized our checklist with the national database. So it means
All right, Mr.
the
Apara.
bank taking only the information of any individual in the social register, you give a bank account directly. And we are partnering with a lot of banks who are doing this, and we're giving bank accounts. We just partnered with Zenith Bank.
All right, Mr.
And
Apara.
using information from the social register. In a turnaround of 2 days, Zenith Bank gave bank accounts to 30,000 individuals on the social register who are currently benefiting from the UNDP cash transfer, paying directly to their accounts. So this kind of partnership is ongoing with a number of banks across the country and other money agents. Good news is the federal government has also granted license to MTN and Airtel, expanding further the opportunities to bank our people.
Okay, Mr. Apara, thank you so much, Mr. Yowa Apara, the National Coordinator, National Social Safety Nets Coordinating Office. Thank you so much for coming on Business Morning. We've run out of time now. Thank you so much.
Thank you so much for having me.
All right. All right, we'll take a moment now. When we come back, we go straight to the markets. Do stay with us. This is Business Morning. Welcome back. Let's head on to the markets now with Willie Bong. Great to have you, Will.
Hello, Laddie. Good morning.
Morning.
Well, I would say it's a very funny morning. It's negative sentiments have returned to the equities markets. You did say yesterday there was a ping-pong movement happening there.
Yeah.
Now we're seeing the all-share index is still at the 42,000 level, but it's barely hanging there. We saw a 0.21% drop, and that was caused by Dangote Cement. It drove that loss. It was down about 2% yesterday, and that has led the market cap to, barely hanging there. We're hoping it doesn't drop below the 22 trillion naira mark. Now, total volume increased by 10.3%. 10.3% to 249.43 million units, and we say it's valued at 3.58%. 3.58 billion naira, and all in 3,579 deals. It was a green activity chart yesterday, but still not enough to outweigh the losses that the market has had. The banking index had a 0.45% loss. Consumer goods index was down. Industrial goods was weighed down by Dangote Cement, like we said. Oil and gas index was boosted by Total Energies. Big ups to that. Now we move on to the fixed income market, where we saw a bit of still quiet trading. A lot more activities happened there because interest for mid-dated maturities. We also had the Treasury bills auction and the bond auction that took place on Wednesday. We have Chuka Nwachukwu, head of bonds trading, to tell us at UBA to tell us what happened there. Good morning, Chuka.
Good morning.
Now, we had the bond auction, the Treasury bill auction on Wednesday. Give us a rundown of what happened.
Okay, thank you very much. Like you rightly said, we had the bond auction and then the T-bill auction both on Wednesday. So I'll just take the T-bills first. In the T-bills, at the T-bill auction, we saw a drop in rates of the 1 year deal, dropped from 5.34 at the previous auction to 5%. The 91-day dropped from 2.50 to 2.49, and then the 182 days rate was maintained at 3.45. So this actually has taken the pattern of this time last year, where we saw rates drop as low as between 1 to 2 basis points. So this has actually impacted in the market, especially on the T-bills market, where we saw that yields continue to drop, even though this week there hasn't been much activity, like you pointed out. There were meant to be a OMO auction yesterday. Unfortunately, that didn't hold. So we hope that next week we should be able to have that OMO auction. Now, come to the bond section. Two maturities were on offer. We had the 2026 maturity, which retained the previous rate of 11.65. Then we had the 2037, which the rate was moved upward from 12.95 to 13.1. That's quite significant. This has actually, you could see that it's more like opposite between the bond option and that of the T-bills.
Now, we see total allotment for the treasury bills was really low, especially for the 364-day paper. We saw a subscription of 63.34 billion naira, but the CBN still allotted very low units. What's happening there?
Okay, personally, I feel it has to do with interest. You notice that towards the end of the year, there isn't much interest in terms of trading, and so people trying to like stock up, and then of course we've seen that the rate has been dropping. It has actually dropped from almost 9.1% to almost to 5% in less than 6 months. So I believe that it has to do with appetite.
So we were guessing that the next year would be same, looking at apathy, less appetite in the markets, or interest for bonds and treasury bills. Is that what you're saying?
No, well, next year projection is that yields will go up, both on the side of the T-bills and that of the bonds. My projection between now and end of the year is that on the bond side, we will see slight movement, upward movement in yield, even though there won't be much activity on that end. Also, on the bond side as well, I will also see drop in yield, especially by January. In January, we have a huge maturity of 2022 maturity, accumulative of well over 650 billion maturing, and then of course also coupon payment. So we expect to see some of those. We expect to see some of those.
Chuka, thank you so much. We know that we are going to take more of the projections probably when you come on next time. So this is where we're going to leave it today. And thanks for the insight. We look forward to maybe prosperous new year. Ladi, that's what the market is saying right now.
Quite interesting. All right, Will. Thank you so much, Will. All right, Lad, let's look at the crypto market. We see the market cap there, about $2.11 trillion traded. It's down 2.11%. 24-hour volume, $88.70 billion, down 22% there. Now, let's cross over to Michael Enaji now, right there. Great to have you, Michael.
Hey, happy Friday, Ladi. Thanks for having me.
Happy Friday, Michael. Well, we see the Senate Banking Committee had a hearing on stable coins with Senator Warren taking aim at stable coins, claiming that it props up DeFi, which he claims is the shadiest part of the crypto market. Is she right?
Senator Warren is severely underinformed about the crypto market. She claims that DeFi is the most dangerous part of the crypto world, and it's underpinned primarily by stablecoins. So the hearing is one of those hearings that we've always been having. This is the third one this year. But the most important thing that came out of it was consumer protection, systematic risk, and eventually preventing a run on the bank. And this hearing is predominantly paneled by academic types. So this was basically to counterbalance the positive hearing that we had before with the crypto executives. So Senator Warren is right that stablecoins is the lifeblood of crypto, but she's severely underinformed in the sense that DeFi provides financial access to people who don't have access to lending, borrowing products. And there is something to be said about transparency of stablecoins. And these senators are just struggling to find out how they're going to regulate this. But overall, she was misinformed in the sense that the crypto loans are.
Okay. All right, Michael. Well, we'll keep tracking because right now it's all about regulation for the crypto market. We'll keep watching and see how the regulators actually play this crypto market. All right, Michael, thank you so much. Enjoy your weekend. All right, now that's a wrap of the program for the week. Thank you so much for watching. I'm Ladi Williams. Remember, you can join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Thank you so much for watching. Enjoy your weekend.